Investors and traders, welcome to the channel. Market chart pattern today is 17th of January 2024, and I hope everyone is having a great day. In this video, we are going to take a look at a number of really interesting things. If you recall, a couple of weeks ago, we did a video. It was a weekend review in which we looked at timing for the markets, and we were looking for a possible low to low cycle of 53 to 54 trading days. And based on that cycle, which we used the Dow Jones Industrial Cash Index to forecast, we were looking for a low to come in around 17th 18th of January. So we are going to review that, and whether we are on to something, whether this 53-54 trading day cycle is something which works quite well or not. This is something we are going to take a look at, because time is elusive, and what we are trying to find the different kind of cycles that work in the market. As always, this video is for educational purposes only, and it is not a financial advice. With that, we'll take a start. We will have a quick review of the different key markets. So we'll start with the bonds. Bonds were under pressure today as well, and the 10-year Treasury note lost about 0.43%, and the 30-year long bond futures was a little bit stronger than the 10-year note, but still closed in negative. Now the dollar index. Dollar index is really interesting. We'll take a look at its intraday chart as well. And beginning of the trading session in the morning, dollar was pretty strong, and towards the end it began to actually give up some of its gains, and that's when we also saw some buying come in into the US stock indices as well. So the dollar are pretty much flat in my opinion. Euro USD also flat. Again, the action has really been in the USDJPY, which is the dollar versus the Japanese yen, and the dollar seems to be strengthening a lot against the Japanese yen, but now it is also approaching key levels, and we'll be taking a look at the chart. GBP USD, the cable has been pretty much stable to a little bit stronger on the stronger side, and today was no exception as well. Now gold lost $22. Yesterday it lost $20 as well, and silver, which was actually weaker than the dollar itself. So we'll take a look at the chart of the gold because of the key levels that we were watching. We took a look at that yesterday. We'll review that and the key levels we should be paying attention to should the market get there. Energy, so crude oil. Crude oil has been really interesting today because it was right towards the $70 per barrel lows. That's where the market went to, and then of course it's closed higher. And 1.29 percentage points. So it's good to see. Well, I shouldn't say good to see, but this is after a few trading days, we see actually crude oil closing in the greens. So this is something we need to pay attention to it. Natural gas was a little bit more stable after a 15% sell-off yesterday. Talk about the kind of volatility that exists in this marketplace, and it closed about 1.34 percentage points. The key US stock indices that we follow, all of them closed in the red today. In fact, at the open there was quite a big gap. We have the retail sales data came out today, which was stronger than expected, and that was one of the reasons that maybe the market actually led to speculation that Federal Reserve might not be very quick in terms of cutting their the interest rates or the Fed fund rates, and maybe that could have played into it, and we saw a negative all across. In the S&P 500, it lost about 26 points. Roughly 27 points, and the S&P 500 E-mini futures lost nearly 30 points. The one of the really weak one was NASDAQ, lost about 117 points. Dow Jones Industrial, this is we are looking at the E-mini futures contract, lost 81 points. This one is actually one of the stronger of the lot because it only lost, comparatively speaking, a minus 0.22 percentage points, and as the ongoing theme is Russell 2000, it lost the most. It lost about 0.8 percentage point, but it also closed at a really key level which we had discussed yesterday, so we'll be taking a look an in-depth look for these indices on their respective charts. Okay, so I'm gonna move this over, and we will begin to take a look at Dow Jones, excuse me, dollar index first. So this is the daily chart of dollar index. And yesterday we were talking about this channel formation, how the market has actually broken out of it, and today it went right up to the 78.6% Fibonacci retracement, and that's where when it began to actually pull back a little bit, and towards the end of the day it had actually given back quite a few of its gains. Now there is a possibility that this could go and actually tackle 104.25 points, which is right at the top of this swing high, but before that the 78.6% Fibonacci retracement, this is what it has to tackle and get over onto the upside. So here again, watching the dollar really carefully, because what we have seen today in terms of intraday price action, as a dollar began to pull back, we saw buying come into the indices as well. So definitely there is some correlation which exists. So keep key level we are watching 78.6% Fibonacci retracement around 103.40, and moving above that is a 104.25. Now we'll just take a look at the USD JPY. So this is the dollar versus the yen, the daily chart. Here, look how strong it has been after finding support from the 78.6% Fibonacci retracement. It's also possible to actually draw a trend line like here, and it just broke out of it, and it is moving towards the 78.6% Fibonacci retracement, which comes around 149.30, and we also have this trend line moving around here. So we'll have a confluence of two things coming together, which is something always we like to pay attention to. So again, the key level to watch for the dollar versus Japanese yen is one of 149.30, and Japanese yen seems to be weakening a lot against the US dollar. Now as we look at this daily chart, what we can see is that actually we have this double top formation here. This is a micro double top, and this is a double top compared to this top and this top here. So we'll have to wait and see how the market is going to react when it gets to this level, should it get there, whether it's gonna then begin to resume its move lower and ultimately get to this 61.8% Fibonacci retracement around 136, roughly 137 area. Okay, so we'll now take a look at gold. So this is the daily chart of gold. This is the futures COMEX gold daily chart of the futures for the gold. And here what the pattern that we had been watching for has been actually lower highs and lower lows ever since it hit this 1.272 expansion of this swing high to low, and then it completed this one-to-one price projection ABCD around here. So a confluence of two things coming together, and the market has really gone nowhere. It's just really trading sideways, but within that there's fair amount of volatility. These last 2 days have been $20 moves. So this is $22, this is roughly $22, this was about 20 bucks as well, but to the upside. And what we are looking at shorter term is you see these green lines. This is one-to-one price projection ABCD. So the market is likely to get to around 1988 level in short term, and this should provide some support. But should the price actually break this low, and there is a chance it might do that, although we have the 78.6% Fibonacci retracement right below this level, about $4 lower, then what we are actually looking for is this larger one-to-one price projection ABCD, which could in fact see the price move as low as 1938, roughly speaking 1937 and a half, but 1938, and that should be a key support level. And should that support give way, then we have to look at this chart in a different angle. So now for short term we are watching 1988 followed by 1938. Okay, let's move on to crude oil. So this is the daily chart of crude oil. This is the futures chart, and here if we look at this, it's really been a sideways trending range for this, and we can in fact draw a little trend line here connecting like this. And what we have seen is actually crude come down as low as $70.50 a barrel, and found good support. So in fact it's still in a trading range, but there is a fair amount of volatility in this market. Let's take a look at natural gas. There's fair amount of volatility in crude oil market, but natural gas is topping everything in terms of the two energy complex that we are following on regular basis. So today, 17th of January, was a relatively not a very volatile day compared to yesterday, where it moved 15% lower in one day. Now it's still possible for the market to reach to 2.676, so that's going to be the 61.8% Fibonacci retracement, but it looks like there is some reduction in the downward momentum coming, but there is still a possibility that market could in fact reach the 61.8% Fibonacci retracement, and there was some support came in at the 50% level, but still thinking that the 61% retracement might actually be, the market might actually be going. Now let's move to the stock indices. So this is the S&P 500 cash index. Look at this one here again, just a reminder for the new subscribers. First of all, welcome to the channel. Here, one thing I want to point out is S&P 500 on a cash basis did not take out its all-time highs, in my opinion, that are likely to still to come, because we also have this one-to-one ABCD price projection here. So in fact 49.10, roughly speaking, is the kind of area we're looking at, but the market over the course of last 3 trading days in particular has been under a fair amount of pressure, and what we have seen is the market come lower and then find some buyers, and where it has closed is pretty much a doji candle. There are a few other names for this kind of candle, but what is really important is how the market is going to trade tomorrow. If it moves, if it opens higher tomorrow, we could potentially have an island reversal pattern formation, but a bullish one, and maybe even an abandoned baby bottom as well. So again, this is something we are watching. Now let's take a look at the S&P 500 E-mini futures. So here we have a potential double top formation here, but if the market is strong, and what we'll be looking at the Dow Jones 54 trading day cycle, we'll just call it the 54 trading day cycle, then that might provide a good low, for example. We'll have to evaluate, and then this market could actually be heading higher to 1.618 expansion around 49.40. Now let's take a look at the NASDAQ 100 really quickly. NASDAQ 100 still has a chance at 17,250. But again, what we have seen is this market just go sideways for a number of trading days, and it's also very close to our this key number that we have been watching for quite a while. So again, it all depends whether these lows will get held as buyers come in, whether the yields will pull back, the dollar begins to get weakened. So this is why we always take a look at all these markets together. Now let's go and have a look at the Dow Jones Industrial Average. This is the cash index on daily basis. You see a lot of lines here. I will put a link to that video in the description and also towards the end. You'll have to actually watch that section where I go through this. That's gonna be towards the second half of the video, and I'm not gonna go into the details of all these lines that you see, but I was trying to find whether there is a shorter term pattern that exists, and I was trying to find a relationship between high to high, high to low, low to high, and low to low. And what I found is that actually there is much more consistency if we take a low to low, and we begin to count the trading bars or the trading days between a low and a low, and generally some mathematically adjusted what I begin to see is that roughly about 53, 54, maybe even 52, trading bars is where we have seen a low to low appear, and based on that, what we can see is the next projection from this low. And if we just project about 54 trading bars here, that came in around 17th of January 2024, which was today. So now we'll have to wait and see how the market is going to react. So with this, because time is always elusive, um, and finding these cycles, they sometimes contract, they also expand. They are never really a finite kind of or definitive kind of science, that certain thing will always follow a certain path. They expand, they contract. So with that in mind, we are trying or making an attempt to find something, and if it begins to work, then it means that it's also likely to work in the future. And then I have also done some Fibonacci work on the time axis as well, and we have a key date coming up around the 27th of February 2024, and this one is again +2 -2 trading days on either side. So we give or take -2 trading days. It can come a couple of days early, it could be a couple of trading days after this date, but around 27th of February to beginning of March is something, the time frame that we need to be really watching. And how it has done before, we have an internal retracement, this 0.618. Normally we take a look at this on the price axis, but this is on the time axis, and it coincided really well with this low. Again, it was not a perfect one, a couple of days early, the exact low, but if we were to just expand by 38.2%, then the next date that I'm getting is 27th of Feb, +-2 trading days on the either side. So it'll be really interesting for us to actually watch how the markets will unfold when we get there. But for now, what we are looking at is whether tomorrow and the day after, how the market is going to trade, and whether we might actually be in fact at a low or closer to a low in the market, which will be very interesting. Now we'll just go back and take a look at the Dow Jones futures chart. So here, this is what we were watching yesterday. We have this big ABCD pattern completed around here, a little bit higher in fact, but the key thing is that the market has just gone nowhere. It's just been trading sideways, and today it in fact during the pre-market hours, because it's futures, it made an attempt to move lower and actually moved a little bit lower here. Then intraday it had completed a pattern formation, a one-to-one price projection. I'm not going to go into the detail of that. We are the video is getting too long, and what we have seen is actually the market close above this. So what we would like to see is if this level is to break, that's the low of the 20th of December 2023, we will want to see two good closes below this level on the daily chart. So two consecutive good daily closes below this level. That's gonna give us the confirmation. We don't have that yet, and that's good for the bulls. Again, the timing stuff that we looked at, we combine that with this, then there's a chance that actually the market is trying to find a bottom here and might rally, and in fact might go and exactly go to about 38,150 level. So this is what we are watching in the markets. And before I forget, the Russell 2000, this is the Russell 2000 daily chart, and this is what we were discussing yesterday. This is the one which has been pulling back a lot compared to the other ones that we like to follow. And the reason is that small caps, that if the yields are rising, these smaller companies, their balance sheets are not as strong as some of the really big companies like the Magnificent Seven, the Microsoft, the Apple, for example. So the interest rate does hit their financing, so that's why we are seeing this, in my opinion. And from a technical perspective, this 38.2% Fibonacci retracement from this swing to high to this low has been a real resistance level, and we were watching for this to get down to 1920, which is the 38.2% Fibonacci retracement from this low to this high, and it did that today. And actually it came between the 1.272 and 1.618 Fibonacci expansion of this BC swing here. I haven't labeled these, but in fact I could also, well, it's not a perfect ABCD, not yet. So this is really good that it actually closed above the 38.2% Fibonacci retracement. So the chances are maybe tomorrow we begin to actually see some recovery in these stock indices, which have been actually moving lower pretty much since the beginning of the new year. So thank you very much for watching the video, and I wish you good luck and good trading.